Hello, my future CAs. I hope you guys are doing absolutely fine. I am telling you, I am also fine. So, welcome back to the another revision session of our indirect tax. And today we are going to revise the Section 10 composition levy. It's a very interesting concept, and you can expect a 5 marks question. Although there is a no thumb rule, but still there are chances the ICA can ask a question on composition levy. Okay, let's understand why government introduced the composition levy. So when the GST came, most of the people are afraid of GST and they are not registering under the GST because you have to pay high tax. This is the people perception towards the GST. Then our Modi ji introduced a new scheme in that they gave a lollipop to people. If you registered under the GST, you have to pay less tax. Means any person who is registered under this scheme, he has to pay less tax as compared to normal GST registration. But there's only one condition, one or two conditions, sorry. First condition, you will not take ITC on your purchases. Second, you do not make the interstate supplies. Third, you do not provided the services other than restaurant. These are the three prima facie conditions the government has applied on composition scheme. So if you are registering under the composition schemes, no ITC will be granted on your purchases. No interstate supplies you can do, right? And third, no services you can provide under this scheme. Then, sir, what's the benefit of this scheme if there is a no ITC? Let me tell you, in case of a high margin business like fashion, fashion market, in which generally the purchase price is very low, but the sell price is very high. There is a huge margin gap. And although they do not take the ITC, but on sale they have to pay very less tax. That's why it is beneficial for those who have a high margin business, right? So for those, this scheme is very beneficial. Okay, let's go through one by one. First section they have introduced is section 10.1. You do not need to remember the section because there is a no marks given for the sections. You just need to remember the concept, nothing else. Okay. First section is section 10.1, which is about goods and restaurant services. In that case, they have introduced a limit. If your previous financial year turnover is up to 1.5 CR, only up to 1.5 CR, only then you are allowed to be registered under the composition scheme. This is about the other states. But there are few states on which this limit will not apply. Only 75 lakhs limits apply. These are the states Matsun. M is about Manipur, Mizoram, Meghalaya. These are the three sisters, I say. Right? Manipur, Mizoram, Meghalaya. After that, A is for Arunachal Pradesh, not Assam. Right? T is for Tripura. S is for Sikkim. U is for Uttarakhand, not UP. And N is for Nagaland. For these state Matsun, the limit of previous financial year should be 75 lakhs. Means if any business have a turnover of more than 1.5 CR in previous year, then first of all, he is not eligible for composition scheme, right? If if they are belong to these states, then the turnover limit has reduced to 75 lakhs in previous financial year. I hope so it is clear. If you are eligible, then further three condition applies to you. You do not have to take input tax credit. You can't do the interstate supplies. And third, you can't do any services apart from the restaurant services. I hope so you got my point. Okay. Sir, what is the procedure for opting the scheme? Okay. There are two type of person. First, who takes the new registration, who earlier doesn't have registered under a GST. Now he want to register and in composition, not in normal scheme. If he want to take a new registration, a fresh registration under the composition, then he has to take the registration from the effective date. Sir, what is effective? We have seen in our registration chapter, what we have seen, if a become liable, person become liable under section 22 or 24, he has to take registration within 30 days, right? If he applies for registration within 30 days, then the date on which he is liable, yeah, he crossed the 10 lakh, the day on which he crossed the 10 lakh, 20 lakh or 40 lakh turnover is the date which is an effective date. But if you are a lazy person, means you have applied after passing 30 days from the due liable date, in that case, the registration certificate grant date will be your effective date. I hope so it is clear to you. So the same case will apply to here also. If your turnover exceed 10 lakh, 20 lakh, 40 lakhs, you have to apply within 30 days. Then the day on which you cross the turnover will be the effective registration date. Otherwise, the registration certificate grant date will be your effective date. Okay. Another is a person who is earlier registered under the normal scheme. Now the Modi ji has introduced the composition schemes and he has a beneficial option to opt to composition because he has in the high margin business. So he want to opt to composition. So what's the procedure? So if you are already registered under a normal scheme, then you only can opt under the composition in beginning of a financial year. For example, if you want to take the registration for 25-26 financial year, you have to come to government in April 25. Only then you can opt for a composition scheme when you already registered under normal scheme. I hope the procedure is clear. Okay, now let's deep dive into the turnover. I have told you the turnover limit is 1.5 CR or 75 lakhs. What does turnover mean? Okay, so aggregate turnover is just same like our turnover in registration chapter, but there's a there's a single difference is of interest on deposit, loan and advances. In registration chapter, interest on deposit, loan and advances will be the part of our aggregate turnover. We will add this in aggregate turnover. But if the question is about the interest on deposit, loan and advances, in that case, it will not include. What are the things that will be included in our aggregate turnover? So first is our taxable supplies. All the taxable supplies will be the part of our aggregate turnover. All the exempt supplies will be the part of the turnover. All the export of goods means a zero rated supply will also part of our aggregate turnover. And fourth is interstate supplies. Sir, you have earlier told us in composition scheme there is a no interstate supplies. Then how you can add the interstate supplies? How this case is possible? So this condition is regarding the current year condition. These are the current year condition. You have already opted for a composition scheme. But for checking the turnover limit, you have to check the previous year turnover. In that year, you are not registered under composition. Means you are allowed to do the interstate transaction in that year. Means you have a turnover in interstate also. Then why not we should not include in it? I hope so you got my point. So interstate supply, if any in the previous year, you have to include it. Sir, what are the things we will exclude from the aggregate turnover? So first of all, this is a turnover, not a purchase. So any inward supply, even though you have to pay tax on RCM. Means any RCM inward you will not include in aggregate turnover because it's a purchase, not a turnover. But RCM outward is a different thing. It is a turnover. It's on sales. You will include it. Another is any GST taxes you will not include it. Another is interest on loan and advance. This is the very important topic because most of the students do the mistakes here. They will add the interest in the aggregate turnover while computing the composition composition scheme turnover, but you will not include interest on deposit. I hope so. It's a revision. I will not deep dive into the logical reasoning behind it. Okay, so let's see an example also. A shoe dealer, Prithvi Raj, just had an office in Maharashtra and Goa. He makes an interstate supplies from both these offices. In order to determine whether Prithvi Raj is eligible to avail the benefit of a composition under Section 10(1), turnover of both the offices would be included. Since he has two offices, one is in Maharashtra, another is in Goa. So, and both the offices are doing the intrastate. So it's all okay until he is doing the intrastate, not interstate. So for turnover perspective, you help it's an aggregate turnover. Aggregate turnover means pan India turnover. Means the turnover of all the branches you have to take. And if the combined turnover does not exceed 1.5 CR or 75 lakh rupees, since Maharashtra and Goa both are under the 1.5 CR limit, then the limit will be 1.5 CR. Even in case one of the state will be in these states, then the limit shall be reduced to 75 lakhs. For example, one branch is in Maharashtra, another branch is in Manipur. Then the limit will be checked not 1.5 CR, 75 lakh limit. And if they cross the 75 lakhs, then both the offices are unqualified for the composition scheme. I hope it is clear. It's a very beautiful example I have in my book. And one more thing, if you want this book, uh, you can download this book from my Telegram channel. I have mentioned my Telegram link in the description box, and you can join my Telegram and uh, download the book. And if you want the hard copy of it, you can order it from the swapnilpatniclasses.com. Okay, now okay. So there's one important concept when Section 10(1) introduced now. They say you do not make any supply of services, but it's almost impossible. Every person has some supply of services with goods, right? So it is almost impracticable for someone to take a registration in composition. So they introduce a margin relief, in which they introduce a limit. Up to this limit, you can do the services. The limit is 10% of previous year turnover, not current year turnover, not current year turnover. It's previous year turnover or 5 lakh, whichever is higher. Suppose let's take an example. If in previous year I have a turnover of 80 lakh, the 10% of it is 8 lakhs or 5 lakh, whichever is higher is 8 lakh. And let's take an example. In current year, his turnover is 1.4 CR. In 1.4 CR, the maximum he can do the services is 8 lakhs. The remaining 1.32 lakhs should be of goods, right? This is the limit we have to check on previous year, not 10% of current year. I hope it is very clear to you. Most of the students confuse in this. So they have introduced this. And one more thing, 10% should be of a total turnover. Total turnover means aggregate turnover. Everything we shall include in it. The turnover we have calculated from this table. You have to take this turnover. Okay, another is rate. What rate you will take in case, since it is an intrastate, because composition is only allowed when you do the interstate, so always there is a case of a CGST and SGST, right? So in case of a good supply, if you are a manufacturer, matlab you are doing the manufacturing, in that case you have to take 1% tax pay. You have to pay 1% tax out of your own pocket. Because one more thing I need to mention, the fourth condition, the fourth condition, you cannot collect the tax from a customer. You cannot collect tax from customer. You have to pay from your own pocket. Unlike normal scheme. So in that case, if you are dealing in goods and you are the manufacturer, then you have to pay 1% of a total turnover. And in case you are a trader or a wholesaler, in that case, you have to take 1% of taxable turnover. How you can remember it? So T for trader and T for taxable, you can remember in this way. T for trader and T for taxable, and you have to take 1%. In case of a manufacturer, you have to take a total turnover. Suppose the current year turnover is 100 lakhs, and out of which 75 lakh is taxable and 25 lakh is exempt. So if you are a manufacturer, then you have to pay 1% is equal to 1 lakh rupees, right? But in case you are a trader, then you have to pay 1% of 75 lakhs rupees. And this 1% is CGST, is this 1% is IGST, means in case CGST and GST, the rate will be 0.5% each. In case of a services, if you are providing the services, you can provide a restaurant services, you can provide a normal services. So in case if you are providing a restaurant services, then the tax you have to pay is a 5% of a total. All other cases are total. Only the trader case will be on a tax sale. And in case you are providing the services other than restaurant, in that case you have to pay a 6%. Okay, let's take an example. Suppose you are a manufacturer. You are a manufacturer, not a trader. You are a manufacturer. Your turnover is 1.5 CR, out of which 8 lakh is your services, which is in the limit of 10%. Another is 1.3. Then how much tax you have to pay? Suppose Suppose you are already registered under the composition in the previous year. There's a no 20 lakh limit yet. If you have taken the fresh registration, suppose you have taken a fresh registration, in that case, on first 20 lakhs, you do not need to pay any tax, right? You on first 20 lakh, you need to, only the tax you have to pay on 1.2 CR. But I am assuming a case you have already taken the registration in previous year, means the whole 1.4 CR is taxable. In that case, you have to take 1% of 1.32 and 6% of 8 lakh rupees. I hope you got my point. You have to calculate the tax in this way. Now there are some conditional restriction. If you are a composition person, then you have to shall mention the word on your board that composition taxable person are not eligible to collect the tax, because you are a composition person and you are not allowed to collect a tax. And you have to mention on your board, signboard, notices, it a principal place of business or additional place of business. This not much important. Only you need to remember a composition person cannot collect the tax. Another some non-eligible composition. You do not need to remember each and every point. Only you need to remember is first of all a composition person cannot make an interstate supply. He is not eligible for to collect the tax from a customer. He can't do the supply of services save as provided in section 10(1), which is a margin scheme of 10%, right? If you are a casual taxable person or a non-resident taxable person, then composition scheme is not for you. And if you are a person who is required to deduct a tax or collect a tax, in that case also, if you are in eco who is required to collect a TCS, then in that case you are not eligible under a composition. Here, if you are supplying through an eco under section 52, you are doing a supply of services, not goods. Goods are allowed even though you are supplying goods from an Amazon and your turnover is 1.5 cr and you are not making an interstate supply, then you are allowed. But services are not allowed. Services are not allowed under eco, and you are not supplying the non-taxable items over section 9 to main DP. These are not that much important. All which is important is first is your rate, another is your turnover limit, second you need to remember this, and the third is what shall we included in aggregate turnover. These 3 points are very very important and crucial for exam perspective. Okay, so if you see, these scheme is basically for a person who is mainly in goods and who has a little bit of supply of services as well. But some people are very unhappy with this scheme. They says we are a supply of services. Where we should go? We will not take the registration under GST. Then our Modi ji came up with a second lollipop of a section 10(2). This is a section 10(2), and in that Modi ji simply announced, if you are not fall under the section, the first and the foremost condition, if you do not fall under the section 10(1), then you have an option to opt section 10 subsection 2. But the condition is your previous year turnover should be 50 lakh only. So means suppose let's take an example. In the same question, here the limit is 8 lakh. Here the limit is 8 lakh. For example, your current turnover year, for example, your is here it is 80 lakhs. Don't take it that example. Suppose your current previous year turnover is 40 lakh and the maximum limit is 4 lakh or 5 lakh, whichever is higher, 4 lakh, right? But in current year you have a turnover of like 45 lakhs and you have a services of 10 lakh and 35 lakh. So technically you are not allowed because the maximum limit is 5 lakh of services. Then where should you go? Then you have an option to opt for section 10(2). In that, if your previous year turnover is up to 50 lakh, that is 45 lakhs. So you can opt this scheme. But the condition same like 10(1), you cannot do an interstate supplies. You can't do interstate supplies. You can't collect the tax from customer. You can't collect the tax from customer. You can do the supply of services because this section is majorly for services. So you can do the services. That's not a condition. And the aggregate turnover we will calculate in the same way we have calculated under section 10(1). So there's a no major thing. All you need to remember is if you can't able to take 10(1), you can do you can opt for section 10(2). Here the limit is 50 lakh. But there is a no maximum cap of services here. I hope so it is clear. And all other things are not that much important in this chapter. This is a clarification, but we will see this clarification with valuation of supply because this is the concept of a pure agent. Ideally, it should not be here. So that's all in this video. We can do some question solving also if you want. So let's do some question solving if you want some. Just give me a minute. I will. Okay. The question number 12. A Limited is the manufacturing the first thing here is it is in manufacturing. Is in Sikkim. The limit would be 1.5 CR in Sikkim. The part of our monsoon where S denotes Sikkim. In financial year 24-25, the total supply of including inward supplies is 79 lakh. Or, sorry, in Sikkim, in monsoon the turnover is 75 lakh. Okay, here is the breakup. First of all, you need to check, even though your turnover doesn't exceed 75 lakhs, but there might be a cases of an interstate supply, right? So in case there is an interstate supply, you are not eligible. In case you have a current year interstate supplies. Okay, first is 30 lakh interstate forward charge, interstate forward charge. Another is chargeable at a nil rate. It's a nil rated supply. Nil rate is an exempt supply. Exempt turnover is also the part of turnover. It will also include. Another is wholly exempt. Wholly exempt is also include. Another is exempt supply being an interest. I have specifically mentioned this point. You will not include this in aggregate turnover. Another is inward supplies. So RCM inward will not be part of our turnover. So these 2 points will not be included. So if we total these two, 30 plus 25 plus 20, the amount will be exact 75 lakhs. So the turnover is up to 75 lakhs. Then he is allowed under composition scheme because his aggregate turnover doesn't exceed the 75 lakhs. Here the turnover is 75 lakhs. You can entitle to for a composition. So this is a good question for turnover perspective ki how you should calculate the turnover, right? Next question we can do on the basis of a I will okay, this is a very beautiful question. In this you see, so Mr. Yash is a person in Kerala. The turnover in Kerala will be 1.5 CR. Commence his business in the month of an April. In April 25, he started his business. First of all, he make an intra-state services. So he do the intrastates, not interstate. Okay. Another is 20 from April 25 to June 25, he did 20 lakhs. He started his business in April 25. So it's a newly constructed business. There is a no turnover in previous year first. Right? There's a no turnover in previous year means he is eligible for a composition. If there is a no business in previous year, we will assume the turnover will be nil because there is a no business means the turnover should be nil. If the turnover is nil means your turnover is up to 1.5 CR, so you are eligible for composition. Here, what we need to calculate, we need to calculate the tax under composition scheme. So if you are taken, if you have a newly constructed business, so you have a limit in section 20, 22. So in case there are limit of 10 and 20 lakhs. So up to 10 and 20 lakhs, you do not need to take a registration, right? So you do not need to take registrations. Okay. Let's go back to the question. April to June, the turnover is 20 lakh. From July to September, your turnover is 100 lakhs. The total turnover will be 120 lakhs. In each of the quarter, the exempt supply by him is 25% of the total. So in 20 and 100 lakhs rupees, 25% is exempt, remaining 75% is taxable. Okay. Suppose he has take the registration with effect from 1st July. He has take registration of 1st July. Means till June there is a no registration. If you see up to 20 lakhs, there is a limit in case of a Kerala. You do not need to take a registration. If you haven't take the registration as per section 22 under the limit up to the threshold limit, you do not need to pay any tax on it. Are you getting my point? You do not need to pay any taxes on it. And now from 1st July you are registered under the GST in composition. Now you need to pay the tax on 100 lakhs rupees. But in 100 lakhs rupees, 75 lakhs is taxable, 25 lakhs is exempt. Means we need to check whether we are a manufacturer or whether we are a trader. So first he case, if he's a manufacturer, if he's a trader. If he's a manufacturer, the answer will be simple. 1% means 1 lakh. Means if we divide 1 lakh, 50,000 each under CGST and SC. If you are a trader, T for trader and T for taxable, then you have to calculate turnover or calculate tax on taxable only. So 75k, and if we divide into CGST and AGST, the answer will be 37,500, 37,500 each. One more question we will try to do. Question number 15 is a very good question. Here in this question, there's a person, Mr. Rajbir, who is registered under the Delhi. First of all, in Delhi, the turnover will be 1.5 CR. He is doing the business of selling goods related to an interior decoration. He is dealing in goods. First of second condition, he is dealing in goods, not services. Okay. He has opted for composition scheme for the financial year 24-25. His turnover for previous year is 80 lakh rupees. And he is expected to achieve in current year in up to 130 lakhs. Previous year is only 80 lakhs. Discuss whether Mr. Rajvir's son can still enjoy the benefit of composition scheme in financial purchase service 25-26. He is a business. Yes, he is in goods and his turnover in the current year is also within the 1.5 CR limit. Yes, he can enjoy the benefit. Another, his son, Karan, started is the business related to interior decoration. Not the goods. Here the question is goods. Interior decoration. Here his son is doing interior decoration. Interior decoration is a services first of all. After completing the post graduation in the India under the name of the same firm, he want to do in under the same firm. So the maximum limit would be 80 lakh multiplied by 10% would be 8 lakh or 5 lakh, whichever is higher. The limit would be 8 lakh. But as a practicing chartered accountant, what you will suggest to his son Karan? If I will be the practicing CA, I will advise him, instead of opening a firm under the name of a Mr. Rajbir, open a separate firm where there is a no maximum cap of 10%. Here you have a limit of a 50 lakhs separately under section 10(2). Although he is an eligible, he can do the turnover up to 8 lakh rupees. But I will suggest, instead of doing the business under the same firm, let's open a separate firm. Here you have an option, section 10(2). So this question is also done. It's a very very good question. In November 19, they ask for 5 marks. This question is very easy. You can do it by yourself. Okay. So Mr. Ranveer is engaging registered in Himachal Pradesh. So if we see Matsun, Matsun, H, no H is not there, means 1.5 CR. He is making interested. Oh, he broke the condition, he breached the conditions. So note, he can't able to register under this scheme because he's making an interstate supply. If he will register under composition scheme, then it's a fraud case. Another is very easy. He applied for registration on 8 October, means up to 30th September or 20 lakh, he need not to pay any tax on it. And further, he is a turnover of 35 lakhs rupees. He is an architect, means he is providing the services. So he can't be able to register under 10.1. He has to opt out 10.2A. In that the turnover limit is 50 lakh rupees. Your turnover is 35 plus 20, 55 lakh rupees. Matlab up to 50 lakh you are registered under composition, but for remaining 5 lakh you have to pay under normal scheme. Means I have to simply summarize you. There will be a three part. First is 20 lakh, another is 30 lakh, and another is 5 lakh. No tax, services 6%, and normally 18% you need to pay. Just a minute. So 6% of 30 lakh, 1,80,000. 18% of 5 lakh, 90,000. Sorry, not 1,80,000. Yes, 1,80,000. This will be the tax calculation, 180. And after that, you have to pay 90,000, 45, 45 each. Next is 18. Hope you can do it by yourself. Here he is providing the repaired services. Again, services, the turnover will be 50 lakh. His previous year turnover is only 45 lakhs. Then he can opt under the section 10(2)(a). Yes, this is a good question. 19, you can do it by yourself. Otherwise, the revision video will be too long because the question is very lengthy. It's a very good question if you can see it. It's a very, you can mark it as a last day revision question. It's a very beautiful drafted question by ICI for the exam May 23. In that question, Mr. X is a trader. First of all, he is a trader. T for trader and T for taxable. So he has to pay tax 1% of a taxable. I hope it is clear. He, okay, paying tax under normal scheme, also eligible for composition scheme. He submitted the following details and you are required to determine which scheme is more beneficial. Now he want your advice which scheme is more beneficial to him. To check which is more beneficial, you have to make a profit and loss account. Maximum the profit means it is the beneficial for him. So we have to make a profit and loss account under the normal scheme and under the composition. How we make the profit and loss account? First sale, then you have to reduce the purchase, then you have to reduce some expenses and your net profit will come. You have to make in the same way. Okay. Here is outward supply, inward supply, sale detail, purchase detail. Sale details is 90 lakh and 90 lakh is inclusive of GST. 90 lakh is inclusive of GST. So what we will do under the normal and composition scheme, let's talk first about the normal scheme. In normal scheme, whenever you make a profit and loss account, in sales, you will never include the GST. Why, sir? Because GST belongs to the government, not us. It will not be the part of our profit and loss account. I hope you got my point. So any tax we have collected under the normal scheme from our customer, we have to deposit to our government. Not we will not account in our profit and loss account. So 90 lakh is inclusive of GST and the GST rate is 12%. So 112 into में 100% we have to calculate. So 90 multiplied by 112 into में 100, the amount will be around 80 lakh 35,714. 85 lakh नहीं sorry 80 lakh 35,000 80 lakh 35,714. This is the sale amount under the normal scheme. And then there is a inward supply. Inward supply mean purchases. Again, this is 70 lakhs. It is exclusive of GST, means no GST is included. And in profit and loss account, we will not account the GST because it is belongs to the government. So we will take 70 lakh only because it is exclusive of GST, no GST is included. Sale is clear. I hope sale amount is clear to you and purchase 70 lakhs is clear to you. Now the other expenses we will see. Inherent expenses under the both schemes. So 4,50,000 is the other expense inherent. So 4,50,000 you will put here in profit and loss under the normal scheme. Next is bookkeeping expenses, 2 lakh under the normal scheme. So 2 lakh you will put here and the return filing 48,000. Return filing is 48,000. The total expenses if you add 4,50,000 plus 2 lakh and plus 48,000. 6,98,000 and also remember the 70 lakh purchase expense. It's also the purchase expenses now. So total expenses will be 76 lakhs 98,000. So 96 98 is the expenses including the purchase and the sale amount is 8350, not the 90 lakhs. So if we reduce 76,98,000 from 80 lakh 35,714, the profit will be 3 lakh 37,714. So in normal scheme the profit will be 337,714. Now let's talk about the composition and it's very very important. Here the amount you have recovered from the customer is 90 lakhs. First of all, if you are registered under the composition, then you do not have the right to collect the tax from the customer. Suppose there are two supplier in the market, supplier 1 and supplier 2. I will explain in a very very easy example. There's two player in the market. First is supplier 1 who is registered under a normal scheme and he is charging 118 rupees from you. Another supplier who is under the composition scheme is also charging the 118 rupees, right? Because there is a competition and both the supplier are providing you at the same rate, right? Here sale will be of 100 rupees and 18 rupees will be the tax because you have to deposit the tax. But as a composition, you do not need to collect the tax from the customer, means all the amount of 118 rupees. Therefore, although you have an option to sell it at 100 rupees, but you want to increase your profit margin because your competitor is also selling it 118, then you also selling it at 118 and you are registered under the composition scheme, means 118 whole whole sale amount is belongs to you, because there is a nothing you need to collect from the customer. All the amount is yours. But there is a small tricky point. You have to pay 1% tax on it if you are providing the goods as a manufacturer, right? So the whole 90 lakh rupees belongs to you. Whole 90 lakhs rupees belongs to you, because you haven't collected the tax from the customer. So the sale amount here will be 90 lakhs rupees. You can uh, you can get the logic from this example. Okay, now I told you you have to pay 1% tax from your pocket, then 1% is 90,000. Yes, you are paying it from your own pocket. Here, in normal scheme, in a regular scheme, you are collecting the tax from a customer and paying it to the deposit. There's a nothing from your pocket. You are collecting from customer. Here, you take the full amount in your profit and loss account. Means you are paying the tax from your own pocket. If you are paying the tax from your own pocket, then you have to take account in your profit and loss account that 90,000. So 90,000 will be the part of your profit and loss account. I hope it is clear, because it's my own pocket. So 90,000 will be the first expense. Another is our 70 lakh rupees. But remember one thing. In normal scheme, we have take 70 lakhs because the GST amount will not belong to it. And whatever the GST we have paid, we take the input tax credit on it. We pay the input tax credit on it, right? But under the composition scheme, you will not get any composition, you will not get any input tax credit, right? You will not get any input tax credit, means you have to pay the GST from your own pocket. Under regular scheme, you can take the input tax credit and utilize towards the outward, means there is a no loss. Matlab, if I explain you in a better way, you have paid the tax from your own pocket in regular scheme 8 lakh 40,000, and out of which you have recovered 9 lakh 64,286. If you divide 90 lakh divided by 112 and multiply by 12, the tax amount will come, which is 9 lakh 64. You have paid from your tax 8 lakh 40 to government and collect from customers, means you have collected much amount which you have paid. So you have paid already this amount. Now you are paying the extra amount to the government, means you deposited all the tax to the government, and there is a no pocket loss from your side, because all the tax you have collected already from the customer, and which is you deposit to the customer. 8 lakh 40,000 you have paid on purchases, and remaining you have paid at the time of sales, right? There's a no pocket loss from your own pocket. But in composition, if you see, you haven't collected from the customer, but at the time of purchase you pay from your own pocket, means 70 lakh 12,000, 20 lakh multiply by 12%, the amount will be, the amount will be 84,000. Ruko, just a minute. 84,000. 8 lakh 4,000. 8 lakh 40,000. You have paid from your own pocket. You haven't recovered from the customer. You haven't take the ITC, means it's part of your cost. So in purchase, you have to take 7840. So the tricky point here is 78. You have to see, this point is very tricky, which mostly students do wrong in examination. Another is 90 lakh, because the here the differences is here, and another is our 90,000, right? So you have to take this 1,24,000, you haven't take it into a profit and loss, but this 90 lakh will be the part of our cost, home part of our cost. So 90,000, 78 for 78 lakh 40,000, and another some expenses 4 lakh 50, 75,000 and 12,000. These will also part of our cost. So if we total it, the amount will be, total cost including the purchase amount will be 8467, including your 90,000 amount also, right? And your purchase is 90 lakh, your sale is 90 lakh. So if we reduce 90 lakh minus 8467, the profit will be 5 lakh 33,000. Means in composition scheme, This is a much higher profit as compared to the regular scheme. So as a chartered accountant, I will advise my customer to opt under the composition scheme because it is more beneficial to him. So this is a very good question, and you should do it before your examination also. And with this, we have completed all the important question of our composition scheme, and I hope so this video is very useful to you. And if you are new to the channel, you can subscribe my channel and like the video, and also don't forget to share with your all CA finalist friends, because there's a lot of efforts I am putting to make this video in English, especially for on your request. So thank you so much for watching this video, liking this video. So that's it in this video. The next topic we will cover is exemption under GST.